Ron from Ronald Rohde Law, and today I'm really excited to introduce a new series where we sit down and we talk with real estate professionals in the field to learn about how you can invest in commercial real estate. Today we have my good friend and multifamily investor, Chihiro. Thanks for joining us.
Thanks. I really appreciate the opportunity, Ron.
Awesome. Well, we're just going to have kind of this easy conversation because I think you have a really incredible journey. You've taken the steps that so many people think about and want to do, going from, W-2, highly paid W-2, you're a professional, but you've always wanted to do something in real estate, and now you've transitioned to full-time real estate, which is daunting. But tell us a little bit about your background.
Okay. Yeah, so I don't know if I've ever even told you this, Ron, but I worked for 10 years as a claims adjuster, and that was not a fulfilling occupation for me, and I really felt trapped. And really, business school was kind of my ticket out of that, so I did that, and during business school realized that I enjoyed analysis, so decided to move into analytics. And then my post-MBA job my career started in analytics, and I worked at Toyota in an analytics capacity, first as an analyst and then as a manager. So that was where I was from a W-2 standpoint. But interestingly, some of the same feelings I had in the insurance industry kind of came back after about a year at Toyota in terms of not having control over my life. I used to think about how I could bust my hump at this job here at this major corporation, and maybe I'm going to get a 3% raise, a 3.5% raise or something. But then there's this guy or that lady who's like clearly slacking, and she's going to get a 2.75% raise. Like there's just a serious lack of control over your own destiny, right? And maybe I'm liked more than this guy, and so I have a better chance of promotion. Like, is that fair? I don't know, but that's just how the world is, right?
For
sure. Not having that control was something that I was kind of wrestling with, and so I made the decision at some point about 1 year into that career that I was going to do something outside of my analytics career to kind of take back that control, and that vehicle for me was real estate investing.
So did you do a survey? Did you look at the broader, investment choices, right? We see a lot of the gurus online pitching. Did you look at Amazon drop shipping? Were you looking at crypto or day trading or options, Forex? There's like a lot of pitches out there how people can make money on a side hustle, including real estate, but how did you settle on real estate?
I love the question. So the answer is yes, and also my vehicle is real estate. But like all of those things, people can make money on. People do make money on, but they're busting their butts.
Right.
What they're telling you on YouTube, like how easy it is largely nonsense. But anyhow, for me, yes, I did look into those, and particularly what stood out for me, what was salient for me was like I had been 2 years out of business school at that point, right? In business school, it's such a vibrant community. You're surrounded by really driven, really smart people. And by and large, what they want to do is create the next Grubhub, the next Uber, right? So I saw so many people coming up with e-commerce or some sort of app or service or whatever. And it's just exceedingly difficult to find success in something like that, right? There's very, very few of those entities that my colleagues in business school formed that still exist today, right? So that was left an impression on my mind, like, okay, am I going to start an e-commerce company, an app from zero, and am I going to follow that through to success? Well, there's a lot of people who are a lot smarter than me at business school who are now back at some corporate jobs. So maybe that's not the best use of my time from a risk-reward standpoint. So that was definitely a consideration for me. And equities I looked into for sure, and that's kind of inclusive of crypto. And but, that stuff is real complicated, man. It's, stocks are complex. It's a lot of it is really opaque to me. So I didn't feel like that was a good fit for me either. Whereas when I started going to real estate meetups and real estate conferences, I'm like, okay, this is This is not easy, but it is very simple.
Yep.
Right?
Yep.
This is an analogy I use a lot, but with very few exceptions, most people are capable at some point in their life of running, right? Unless you're disabled or something like that. But there's only one person who can run like Usain Bolt, right? So it's extremely simple, ridiculously difficult. That's kind of what real estate's like, right? You buy a crappy property, it needs to be rehabbed, and if you do that, people's willingness to pay rent on that property are increased. That's it. That's all you're doing. So I like that simplicity, and so I just went in headfirst into that.
So tell us a little bit more, about the attitude, because I think a lot of people are nodding their head. They're watching this video and they say, yes, that sounds like me. I really am not in love with my job. I don't hate it, but it doesn't excite me. It doesn't create any passion. And this is a side note, I've read the two biggest things for somebody's happiness in your life is the amount of control you have in your day-to-day and your commute time. It's those two things that really are the biggest drivers of your happiness. And so if you can't control your commute, the control of your daily life is so much more, even than compensation, right? Because I think in your situation, even if they doubled your pay, but you still had this floatiness of I can't even control. How did they double my pay? I can't replicate it. I don't know if it's going to disappear. If you don't have the control, paying you more doesn't solve your uneasiness or your anxiety inside.
Right.
Okay, so let's talk about this attitude. How did you shift? Because you didn't go jump into full-time real estate, but how did you shift from W-2 to...
Right, it first started for me with just education. I had a tremendous appetite for podcasts. So I did have that commute, right? I think it was 30 minutes there, 40 minutes on the way back every single day, because pre-COVID, right? and so I would listen to podcasts on an accelerated speed so I can consume more content. And I literally did that every day for years, at least 3 years.
Okay.
So I learned a tremendous amount about multifamily well before I could even sniff my first deal,
And what year were you starting to do this?
It was late 2016 that I really started researching, reading, listening to podcasts. But my kind of start date that I tell people is beginning of 2017, because specifically in the beginning of that year, I made the commitment to myself with my wife as my witness. Hey, I'm going to be a multifamily investor. And she's like, okay, and of course it took me over a year from that point to close my first purchase, but I was very active to that point. But back to your question. So first step is education, and a lot of people won't even take that step, right? A lot of people will take that step, but then will find it very difficult to cross the bridge into execution. Before you even take that first step of that education, the reading, the going to conferences, you really have to think to yourself, do I have the time, do I have the resources to be able to become a real estate investor? Maybe, I'm an attorney at some white shoe law firm. I'm working 80 hours a week. Frankly, I simply do not have the time to do this.
That's right.
Right.
Time is absolutely a component of investing in real estate, and especially when you get into commercial real estate, you need to have some capital. So, I tell this example. I get people saying, can I get started in commercial real estate, multifamily, industrial, office, whatever? I would say, and you as a GP maybe would say, I still wouldn't take anybody on the GP side or to show them for nothing. And I say that because if you can't even commit $50K or $25K of your skin in the game, I don't really want to take that risk with you. Even if you bring me a deal, no matter how good it is, I'll pay you for it and I'll pay you a fee, but I'm not going to teach you anything. I don't want you inside. And I say that because people say, well, can I get started with nothing? Can I do this? I have time. I can find a deal. But what are your thoughts on that? Can people? You need 100K to start. You need something, even if you're going to partner, right? Bring you a deal. Hey, I don't want a fee, but I'm going to actually put money in on the GP side, and then you can try to learn from that deal.
Yeah, so I definitely understand where you're coming from, and that was my number. Like I need to find $100,000. I need to save and live frugally, which we did, and we saved $100,000, and now I had capital, but I still didn't have a deal, but I felt like I was ready to go. So I do agree with you, but then I also don't want to shut the door on that person who doesn't have that money.
Yeah.
Because I do know people who have been able to make it happen, but you're going to have to be really resourceful. You're going to have to be really crafty to make something happen, because, Ron might not be willing to partner with you, co-sponsor a deal with you, unless you're able to bring some significant capital to the deal. Some other sponsors not going to feel that way, but they're going to get their pound of flesh one way or another, right? So if you bring, Jane Doe, the general partner, a deal, and you can't bring any capital, but you bring the deal, you better bet like she's going to get her pound of flesh. It's going to be sweat equity. It's going to be, who knows? But
right.
But you don't get anything for free in this business.
That's right. That's right. Nothing's free. So, so about that attitude, though, another piece of that component is if you don't have time, if you don't have capital, then perhaps you need to have a healthy amount of risk tolerance.
Yeah.
Talk about how you think about risk.
Yeah, so risk, as I was mentioning to you before we started rolling here, I think about it all day, every day. I'm an investor. Risk is what I have to face, And so, as a little bit of an aside here, we can talk about somebody who works at a W-2 job like I was. I was well compensated at one of the most valuable, prestigious brands in the world, right? One of the world's biggest and best automakers. And so a lot of times people would talk about, it's not an awesome job. I'm not super excited, but man, I've really valued the job security. I've got 2 kids, I've got 6 kids, whatever, or you have no kids, but you really value job security. And yeah, I understand the need for that security, but a lot of times that's kind of a false sense of security, right? That company could lay you off. You might fall out of favor with your boss.
Yep.
And there's also the thing we talked about previously, which is you really don't have a whole heck of a lot of control in a lot of corporate type of environments. At least the one I was in, I didn't feel like I had a whole lot of control over my destiny. So that represents a lot of risk. The other thing people who shy away from real estate investing or any sort of investing for fear of the risk involved, they also don't consider the fact that they've taken risks, numerous risks throughout their life. Mm-hmm. They just don't think about it because it's a part of like the dominant paradigm. So a lot of these people own houses, right? So you've taken a big risk. You put down a big down payment on this house in any town USA, and your hope is that your equity position is going to improve, right? Do you think about that risk on a day-to-day basis? No, but then me buying apartments is too risky? Well, I don't know.
Yeah, no, I agree. There's a lot of momentum in the types of risk that we take every day, and we just take it for granted.
Right.
Getting in your car and driving somewhere is a risk. But, if we actually sat down and penciled it out, we would say that the utility outweighs the risk. And so therefore, after careful consideration, yes, I will put my kid in this car because the alternative is to walk them, 5 miles to the doctor.
Right.
The utility outweighs it. And on the same way, I do think that real estate investors are, maybe they just love analyzing risk. And, you can't just jump into a deal and just, pay any price and not have an exit plan and not know where your tenants are going to come from and who they are. But if we analyze all those things, it's a measured risk, much like driving or buying a house, that we say, okay, here are the risks, here are the pros, here is how I can mitigate it, more equity, and move forward. Mm-hmm. So it's really about calculated risk. But you do have to acknowledge that it's a new form of risk. And so...
Yes. Yeah, that's fair. That's totally fair. But my word to our viewers here would really be that, first of all, recognize the risks that you're taking that you're not even thinking about. You're taking it for granted. The fact that there is risk at your job. There is risk in the fact that you might own a home. So you have taken risks. You just discount those risks because all your peers do it, you know? So think about that and then see if, okay, this different kind of risk, perhaps as a crypto trader or as an apartment investor in my case, if that's a risk you want to take. So do you have the time to do this? And then do you have the will to do it? Do you want to pick up a second job in addition to your day-to-day? And if the answer to those two questions is both yes, I have the time, I have the will, then get after it. Be relentless. You know?
No, absolutely. I think there's a good analogy or a good story. Chad Griffiths, who's got a big industrial YouTube channel, check him out. He was telling me that he does a lot of his video production, content creation, research, and all that, after his kids go to bed. And he explicitly and consciously doesn't watch TV. He's not a big Netflix consumer. He's not watching movies or the shows, HBO Plus, all of that. And he says that it's okay. He loves real estate and he loves doing the YouTube stuff, but it is a conscious decision. And when you break it down into every night, Tuesday night from 8:30 to 10 p.m., he's like, would I rather do something I love that helps propel my professional and investing career, or do I want to sit there and do I have to sit on the couch and do nothing and watch a rerun of Seinfeld or whatever the latest show? I mean, I'm guilty too, right? So my wife and I watch Ozark, and we spend an hour doing that. But at the same time, I always do a mitigation, right? I'll try to either edit at night or I'll read a book. So I'm reading the old book, Never Split the Difference with Chris Voss.
I've read
it's kind
that
of about
book.
negotiation.
And I met Chris Voss.
Oh, really?
Once.
Okay.
Yeah.
So I'm in the middle of that, and again, I will still watch one episode with my wife, but then I also read for 30 minutes in that same hour and a half time instead of completely lazy or completely relentless. But yeah, I think what do you think about balance? Finding the work level that somebody can sustain for a long amount of time.
Yeah. When I was getting started chasing that very first deal, make no mistake, it was very, very difficult. It's hard because you're running a race where you don't know where the end is. Am I going to get a deal next week, or is it going to take another year? And for me, right, it took as long as it did. So that is difficult. And yeah, I was grinding for sure. I would wake up at 5 every day. I would work, and then I would go to work. Slip out for a call here and there while at work whenever possible. And then I'd get home, eat dinner, do the dishes, and then I'd work. That was my daily process for a very long time. So that was the price that I had to pay, but I was willing to do it. So
yeah. So that was the price you had to pay, and let's talk a little bit about the juice or some of the rewards. Like some of the deals that you guys have done, you've exited, and you have BlackRiver Equity Partners. Can you tell us a little bit about what that's produced now?
Yeah, so BlackRiver Equity Partners, that's my LLC, my holding company. I invest everything through that. So I've done a little, just under 600 doors. My first one was a 128-unit value add in Abilene, Texas. That's a smaller metro that has about 170,000 people. 128 doors there, and that one we've sold. Then the next one was a distressed 248-unit deal, which you were our attorney on the disposition side. So plug for Ron, like he did transactional work for us on that deal. So 248 units in the city of Dallas. I wouldn't say super distressed, but an opportunistic deal for sure. It needed a lot of operational improvements and deferred maintenance. And then the next was definitely a 100% distressed deal in West Texas that we're optimistic about. I just came back from there this week, and I think we're really about to generate some traction with that one. So very excited about that one.
So that one's closed, and what stage of the rehab are you in?
We're in lease-up, I would say. Lease-up
okay.
and continuing renovation.
Awesome.
Yeah.
Awesome.
And my fourth deal is the smallest deal that I've done, but actually potentially my favorite. So also a value add, got a really good basis on it. It's in Mineral Wells, Texas, which is about 45 minutes west of Fort Worth. So it's just outside of the Dallas-Fort Worth metro, but it has appeal because it's got a really nice small town, quaint feel with some tourist attractions and a beautiful historic hotel that's being renovated.
Yeah, the Baker Hotel has been in the news for years.
So that's going to be opening hopefully relatively soon here.
Okay.
And so we've got a value-add deal there. Credit to my partner, Brandon Beatty, who's been the lead on construction management. We've really just had a lot of velocity with the renovation, and that has just helped a lot in terms of, in 4 months we've really driven NOI improvement there.
Awesome.
So
Awesome.
that's a smaller 79-unit deal that's the last deal. We bought that one in March this year.
So here's a good question. Do you recommend, if somebody's starting off, to necessarily start with smaller unit count or work with a smaller rental budget or upside, right? Because I do think the more work that you do, the more risk there is and the more upside there is. So if I took a new construction 16 unit and if I complete that, I'm going to make more money than you buying 120 units, but it's stabilized and you're bumping the rents, $20, $30. What do you think is better for somebody starting out? Because I say that because a lot of people come to me and they say, I want to be a small investor. And I always counsel them, like, I don't really love that. I don't think that's great for somebody who has limited time or limited capital. Small means less padding for error, less margin to do things, versus buying bigger stabilized. You'll have on-site management, you'll have more discretionary funds, you can allocate costs across all the tenants a little bit easier, versus just because you buy small purchase price. Like, what are your thoughts?
So it's funny because I talk to people and kind of counsel the opposite of that, which is, people constantly reach out to me and they want to have coffee or a call or whatever, and I almost never say no.
Wow.
Right?
Okay.
And a lot of times a common kind of archetype for this person who reaches out to me is, I own 4 homes, or I have I have 8 doors right now, and I want to do what you're doing. And what I tell these people is, how many partners do you have on those 12 houses you own? And they're like, oh, it's just me and my spouse. I'm like, okay, so you own 100% of these deals, excluding the leverage, of course, but you have no partners. You fully control these. You run these. I'm one of 3 general partners on my most recent deal.
Yeah.
I was one of 5 on the biggest deal that we did, the 248 units. So, I own a sliver of these deals, whereas you have the entire controlling interest on your 6 homes. So think about that. Like, I have a smaller piece of a big pie. You have the biggest piece of a small pie. And so from a money standpoint, like, I don't know. I'm not going to blanket say doing more doors is better, So I think it really comes down to personal preference. Like,
Okay.
What do you want to do? Are you going to house hack? Because you could house hack a 16-unit apartment complex, right? You're a young single dude,
On-site management right there.
Yeah, you could house hack an apartment complex. And so if I had started my journey earlier, that would absolutely be something I'd be willing to do.
I love that. So that's one of the questions I get on, I do the podcast tour thing too, and they say, if you could start over, what advice would you give your younger self? And I say, I would have gotten as much money as I could and bought the biggest apartment that was value add that I could live in.
Yeah.
And, I consider myself kind of handy, but I would live in the worst unit. I would fix it up. I would live in a dusty, no subfloor, no paint on the walls. I would live in that unit, fix it up, rent it out, and then I'd move again to the crappiest unit, and I would keep doing that. And if it took me 6 months or if it took me 2 years, you do that, and then you have just this beautiful asset that you've built by hand, that you've improved at the lowest possible basis. Because again, you are working another W-2 job, and if I did it again when I was early and single, I wasn't making a ton of money, but it would be Home Depot every weekend. I would be fixing and painting things myself. Obviously, bring in some experts for some electrical work or plumbing. That's fine, but a bulk of that work, the demo, the clearing up, and obviously finishing, painting, and you could do it yourself. And so you would have this beautiful cash flowing asset that your basis is super low. Yep. It makes you financially free. We talk about FIRE, and it makes you financially free at like 25, 26,
Yep.
28, whatever the number is. It's pretty early, because now you don't need your job, and you've got this 16 units at market rents, and all the units are nice, renovated. You've got your blood equity, sweat equity.
And you've worked so hard at that, but look at how much control you have over your life.
Yeah, absolutely, absolutely. And to me, those are the motivations that make these things worth it. So, for me, I'm kind of on that same journey, right? I was a W-2. I was a nicely compensated general counsel for a real estate developer. We did new construction, like multifamily, single family. We were doing build for rent before it was a thing, before it was cool. We built like 68, 72 townhouses in a development that we platted and stuff. It was a fun project, but it was build for rent. Mm-hmm. And I quit that job. I left that stability because I needed more time. I needed more time to tend to my investments, and I wasn't getting good carry or promote in the fund side. So I was like, okay, I got to have my own law practice. But for me, it's the control. I control my time now with my law firm, and I have time to control my investments, because that's what the partners that I have, that's what they need more than they need capital, right? They need boots on the ground. They need somebody who can go on site, who knows all the vendors, who has a procedure for interviewing and hiring vendors, and has the debt relationships. Debt is so important, but having those relationships, and then somebody that just can manage asset management is huge. So for me, control is very important to my happiness, as well as the path I've taken. And yeah, I don't feel like I regret not living in squalor, but I do think it would be fun, just to bounce around each unit and then and fix them up, one at a time. But so yeah, I mean, what advice? I mean, I know we've been kind of constantly doling these great nuggets of advice, but to summarize for somebody who is entering this economic situation, I talk a lot about the recession. We're here. It's impacting the U.S. Interest rates are up. Inflation is insane up. Jobs are still there though. Unless you're in that refinancing, over leveraged internet business, who has tons of layoffs, right, because of the decline in volume. Most people have a job. The unemployment rate is still very low. What would you recommend for somebody who wants to invest in commercial real estate, in multifamily today, and they're starting this journey, or they're facing the abyss right now? Is this a good time to start? Is it a bad time to jump off?
It's always a good time to start. The best time to start is yesterday. And it's interesting. Yeah, the macro environment is transitional right now, but the rules of finding a good deal, they don't change. You always make your money when you buy. And then so that's the most important thing, is your basis going in. And the next most important thing, which isn't very far behind that going in basis, is the team. Like, what's that asset management going to look like? What's the construction management going to look like? How much construction does the property need? And how quickly can you execute on that construction? So to use a Howard Marks analogy, so the most important thing is one of my absolute favorite books of all time. He talks about this concept of the pendulum, where we think we have this human tendency to think that the pendulum is just always in the middle, but it's not. It's always moving, and on one end there's investors are totally fearful, and then on the other end it's investors are completely greedy, and we never know where we're at exactly. But you have to remember that pendulum is always moving. So at a minimum, you can think about, okay, are we moving towards fear or greed right now? Clearly today, right now in 2022, we're moving towards fear.
Towards fear.
Right?
Yep.
So just having that understanding, I think, is really valuable as an investor, right? So I wasn't kidding when I said I think about risk all day, every day. These are the things that color your investment choices. So my partner Hunter and I, we've been emailing back and forth this week on a potential acquisition in Abilene, actually, and we're not sure. Like at this point in the macro cycle, we really need to see a lot of juice in this deal for us to pull the trigger, right? And we're not sure right now. That the deal looks great,
But at that price.
but at that price right now, today, are we interested? Maybe, potentially leaning more towards the no side. So I think about, where's that pendulum heading towards, and within that context, do I like this deal at this price?
Yeah, I really like that pendulum. It's the first time I've heard of it. I need to read that book. But I get this a lot of people, they don't want to try to catch a falling knife. You don't necessarily, people don't want to buy too early. But at the same time, we don't know how long this recession is going to last.
Mm-hmm.
And if you really continue to sit on the sidelines, you may miss the recession and the bottom completely because everything is local. And I love that all of the news aggregates and all the big line statistics are nationwide. Nobody really is digging into state specific, city, location. It almost has to be asset specific because you're buying your single deal. And just because the nation is in a recession and maybe contracting, it's going to be unevenly distributed. I mean, the coasts are going to get hammered. Detroit is going to get hammered more. Places that have had high taxes, Illinois is going to get hammered. You just look at all the corporations fleeing. People are already moving to Texas. So I think in that regard, the impact of the recession is going to be muted. It's going to be dampened in DFW. We didn't get hit as bad as '08. But the people, the population, they're going to continue to spend money and have needs and have equity in their homes. That's going to prop up North Texas, for example. So however long this recession lasts nationally, in Texas, it may be shorter and less severe. So if the pendulum is swinging this way, you may miss it at its low point. So I think to your point, I mean, like we're still buying, right? Yeah. I have a video, how to buy in any interest rate. If interest rates are going up, flat or down, doesn't matter. You need to underwrite that. And then how to buy in any market. You can be more cautious, but you still should be putting out offers. You should put out an offer at what you're comfortable paying because you don't know what they're going to come back with. Yeah. So whether it's a yes or no, you still need to learn how to underwrite and what price you would pull the trigger on. And then thirdly, it's if the juice on the deal is long enough, your hold period becomes longer, I would say, when the pendulum has started moving, you have to be able to hold it through the bottom and then all the way coming back. And you're just coming back to zero, right? Your value may drop the day after you buy it. And I tell my investors this, like, you're in with me for the long term. Like, I'm putting my money in. The day after we buy it, the value is going to drop by 10%. But we're okay with that because we're not selling. We're going to hold it. We've got a plan. We've got cash flow. And so if you feel like the pendulum is in the early starts of the swing and it may last for 12 months, well, can you hold it for 12 months plus another 12 months to get positive again, get back to zero, and then hold it on the upswing? Yeah. And that's, to me, is the juice, breaking down, is the juice worth it? Well, can you hold it long enough to go down and then come back up again?
Absolutely. For those of you who are thinking about, okay, I don't want to catch a falling knife, so I'm going to wait. Think about this. Think of Sam Zell, one of the most legendary investors of all time. Take Steve Schwartzman, who's not like strictly real estate, but an investor, right? A private equity investor. Do you think these guys became billionaires because they timed the market? Because they always bought at the bottom? Like, it's an absurd idea. They buy... Investing is an activity. It's a sport of finding relative opportunity, right? So it's not about finding the absolute opportunity because I know I'm the one person in the world who knows how to time the market, and so I will buy at the bottom. It's not that. It's rather, I found this relative opportunity in Dallas, Texas, and so my partners and I bought it, and we were able to make money on it because
and you have capital reserves. You have confidence in the cash flow to tide you over, right? Because like for those examples, Zell is buying heavily distressed stuff, so he needs to turn around. He needs a big war chest to fund the turnaround and to hold the carrying costs through, the bottom. And yeah, it's the same thing for this on a much smaller scale. Is you just need $100,000 in your reserves, and you just don't touch it, and you pay your debt from cash flow, but you have that there for unexpected repairs or whatever. It's absolutely that same philosophy. I talk about this again too, is globally, right? Risk is all relative. We have foreign investors who are now piling into the U.S. because compared to their home countries where they used to be getting 20, 30% returns on real estate, that's bottom is falling out. So then they're piling into the U.S. because risk is all relative. And
Right.
if you have foreign investors, people love the U.S. So that seems to be the message. I'm going to title this video is risk. Think about it every day, but don't be afraid. No, that's great, Chihiro. I really appreciated this conversation. I think I learned a thing or two, and I think that's also a good message. Always, you can always learn. The second you think you have it all figured out, you don't. But
Yeah.
how can people reach out to you? I know they're going to want to take you up on that coffee if you're local to Dallas, DFW.
Yeah, so my firm, the website is BlackRiverEP.com. That's E as in equity, P as in partners. And I'm on Instagram, LinkedIn. My handle is CG Kurokawa.
All right, so CG Kurokawa. We will drop those links down below. But Chihiro, thanks so much
Thank you, Ron.
for joining us. Thanks for watching. This is a great series where we're going to sit down with real estate professionals to really give you guys the confidence to move in that next step to commercial real estate. To me, that's where the end all be all is. You get to deploy more money, you get more control. But smash that like button, subscribe if you like the content, and we'll see you next time.